you were constructive on buying cyclical stocks, saying, look, it's a fundamentals. Forget about DC. Does that mean that you'd be selling vol right now?
Absolutely. I mean, I can't tell where it's going to be in a day, but if you said to me in a month from now, will the VIX be closer to 10 than it is to 15? I don't think there's a question. And what we found is that there's really a couple of things that drive the VIX, but more than anything else, it really is a comment on the economic environment. The biggest risk to the economy is when you're going into recession, and when recessionary risk is really low, the VIX tends to be really low, and this news flow doesn't really change any of that.
We'll talk about news flow. You have a circuit breaker triggered over in Brazil. Brazilian stock exchange tumbles 10%, triggering the circuit breaker. It's like EM is finally doing what they're supposed to be doing. All that political risk in there as well. Is there a distinction to be made between low vol here, and high vol elsewhere?
First of all, volatility tends to move all over the place. I mean, obviously, you can find places like Brazil that are a whole different story, and emerging markets are a different thing. I mean, I was here on election night in the middle of, I think it was 1 o'clock in the morning, when the market was falling apart. The market actually stopped trading down 5%, and 2 days later, it made all of that up. And the right answer is to sell the news flow and buy the underlying trend, and I think that's going to be the case.
When you spoke to clients over the last 24 hours, were they freaking out?
No.
Calm?
They were calm. I mean, I think that, well, I'm not sure how many people were saying buy this second on this dip, but really the big problem that when you have low volatility is the market doesn't actually have pullbacks. So there's a lot of guys who say, I really like that stock or I really like that market and I'd love to buy in if it pulls back by only 2 or 3%, but when the market's only moving, a VIX of 10 means the market moves about 20 basis points a day. So you don't get those entry points. So I hope that some of those people say, I got it, take advantage of it, because when vol falls again, the entry points are gonna melt away again.
Well, they're conditioned by direction, aren't they? When it's moving up, they want to buy, but they want it at a cheaper price, and then when they finally get the correction, they don't want to buy because they see the direction of travel. The
number of guys who say to me is, that it's really healthy for markets if we get a little bit of a pullback. The market's off by 5% or 3%, and all of a sudden they're freaking out. Yeah. So you're 100% right. The way we respond to, and listen, this was less than a 2% pullback yesterday.
We had a record high just the other week.
Right. So what are we? We're 2.25% off of the all-time high for stocks after markets are up by some obscene level just since last June. What, 16%? And so again, is this a big deal? Sure, but it's something. But I don't think it's a really big deal.